So welcome back to KW Property Management and Consulting's Community Association's Best Practices monthly webinar series. I'll be your host, Tim O'Keefe, an executive director and partner with KW Property Management Consulting. Last month, we had a great webinar. We actually had two webinars because we had such great information to share on budget season that it took two sessions to get through that in back-to-back weeks. So we hope that you certainly got value from the great conversation we had and our panelists from last month. Today, we are going to have an equally productive and successful session today. We're going to focus on maybe the largest single line item in many of your association budgets, that is insurance. We have a terrific panel today that will guide us through the challenges and new requirements for insurance. So let's meet our panelists and get started. First, I want to introduce Laura Manning Hudson. Laura is the managing shareholder for Siegfried Rivera's West Palm Beach office. With 25 years of experience, Laura, you're probably thinking, how could that 25 years have gone by? But 25 years of experience, Laura concentrates her practice in condominium and association law and construction litigation. So Laura, thanks for joining us today.
Thanks for having me.
Great. Next, we have Michael Clark. Michael is a shareholder in Siegfried Rivera's Coral Gables office. Michael's practice is primarily focused in the areas of construction, insurance, and commercial litigation. Thank you for joining us today, Michael.
Thanks for having me, Tim.
Michael and I go back a long way. I first met him on a plane about 12 or 13 years ago. We just happened to sit next to each other. And I don't know if we were flying back from Tampa or Orlando, Jacksonville, someplace in Florida, but we were sitting next to each other. And then also we have Derrick Karadi. Derrick, thanks for joining. He's a senior vice president and commercial insurance advisor at Brown & Brown Insurance. Derrick has a great deal of practical experience dealing with community associations that are navigating the changing laws affecting many associations. We look forward to hearing a lot from you today, Derrick, and welcome to the program.
Tim, thanks for having me.
Sure. Thank you for joining us. So, Derrick, I think I want to start with you. The focus is going to be all about insurance, and a big question that's going to come up is how do we control our cost of insurance? But before we get there, you've seen a lot of swings in the Florida insurance markets in your career, and we're in a very challenging time today with insurance rates increasing wildly while the legislature mandates reserves, and there are fewer carriers than ever offering insurance to Florida properties. So can you share what you're seeing in the insurance markets and how we got to this point today?
Absolutely, Tim. Again, thank you for having me. One of the bigger questions is always, how is it we got here? Where is it going? And where are we today? What are the solutions to help mitigate costs? And is there light at the end of the tunnel? As what most people would present as the primary questions. And just from a very high level, there's been many contributing factors, as we all know, but some of the main ones, first and foremost, is something called reinsurance. Most unit owners and property managers are well versed by now, but reinsurance is the insurance for insurance companies. As those costs increase, it ultimately trickles down, and as us bottom line consumers and us homeowners and unit owners consequently feel the brunt of that. In addition to that, we also have capacity. You mentioned capacity. So just on that topic, we've seen over the last 12 months or so, maybe more, over the last 12 months, about a dozen carriers or more take outside of the marketplace, whether that was a strategic decision financially, or perhaps they just simply went insolvent or bankrupt and had to liquidate all their assets for a number of reasons that may be. In addition to that, we've had Surfside, which has changed the entire status quo of our industry, including the scrutinization of underwriting, having those structural integrity reserve studies having to be conducted and asking for that information upon underwriting, asking for 12 months of board minute meetings to ensure that board members are being held accountable for the upkeep of a lot of their buildings. The next thing is litigation. Litigation is critical, and I'm sure Mike will have a lot to speak on that. But litigation has taken a significant toll on our industry. And in fact, as a fun fact, some of you may or may not know that Florida here accounts for about 8% of the property market all throughout the United States with regards to premium volume in the insurer world. Having said that, we account for 80% of the litigation across America with regards to lawsuits or people making lawsuits made against these property carriers. Whether fraudulent or not, we live in a very litigious state. Now, some of those examples might be a simple water claim that was ballooned from a contractor or public adjuster that went from $5,000 to $25,000 so on and so forth. And then finally, catastrophes have played a big part of it. And that's it. So those are the main contributing factors. Now, what we're looking at ultimately is that hopefully with some of these bills and recent legislatures that have been passed, will change a lot of that with some of the regulations and things that they're looking to help mitigate that. As far as solutions goes, to your question, Tim, there's many different alternative solutions. What we found in a lot of the condominium realm is a lot of associations, due to the hardening marketplace, have been unable to obtain full windstorm coverage for a lot of their buildings, which have resulted either, maybe perhaps it was available, but it wasn't financially affordable, which has led us then to maneuver through alternative solutions via that of a hurricane parametric program or loss limiting, which then
let's Derrick, if we can, we'll come back around to that. Okay. I want to, you made a couple of comments that I thought were interesting. I want to ask
Sure.
Michael. Michael, you've been in the market for a long time. Like, take us back to, the old days, 2004, 2005, and what you saw change with that hurricane cycle. Because we got really lucky for 12 years, from about 2005 to 2017, there were no hurricanes in Florida. So take us back to what happened during those Wilma and Katrina days, and how you saw us kind of advance forward to get to where we are today.
Sure. Thanks, Tim. So interestingly, my career path started as an insurance defense attorney for property insurance claims right about that time. So 2004, you had Gene, Francis, and Charlie. 2005, you had Wilma, Katrina, and Rita. And you had these storms that just tore through Florida. I mean, 6 storms in 2 years, and it decimated the market. And the way that the legislature and the way the laws were set up at that time, they were designed to really level the playing field, or that's how they were tended to be. But these insurance companies just took these huge hits. Actually, that's not fair to say. The entire state took huge hits because the insurance companies took huge hits because the insureds, the homeowners, the condos, they took huge hits, not seen really since, Andrew. So what happened was all of a sudden claims and litigation just went bonkers. And it was simply, a battle of attrition. Certain carriers just decided to flat leave Florida because of the claims and because of the losses they had sustained. I mean, at some point in time, an insurer looked at it and said, there aren't premiums that I can charge that someone is going to pay in order to make it make sense for the insurers. So you started there, and then you had these claims. And when I say that the laws were designed to make it even, it was really because if you look at it, the insurers have the money. That's what they do. They maintain a certain level of reserves to ensure that they can indemnify somebody, bring them back to their pre-loss condition if they sustain a loss. So then what would happen is, if there was a dispute as to a claim, the laws had been set up in order to ensure that the policyholder would have some ability to fight back. And just like anything else, there are some that look at the laws and figured out how to take advantage of the laws and play it best to their advantage. And the balance of power started to shift. And so recently what has happened, especially with the starting with Irma and then moving forward, is that the legislature has started to change the laws. The laws are constantly evolving, but we've seen some really significant changes, which have, in my view, put the insurance companies back in kind of the bird's nest, put them in the position of strength for purposes of claims. So it's, and it's to keep carriers here. It's because, as Derrick said, I've never heard that we're 80% of the litigation. Seems a bit high, but I've never heard anything different. So I'll absolutely believe them. But it's hard to conduct business here if you think you're just going to get sued all the time.
And I have seen that and read that statistic that Derrick shared. It's about 8% of the market, and 75 to 80% of claims happen throughout the country in Florida. So that's real. And then we got lucky, right? We went on a 12-year run where we had no hurricanes, and so insurance kept coming down and down and down and down. And then we got in this new cycle since 2017, really since Irma hit. And we've had, probably a hurricane or two almost every year, and insurance started to head back up. So the way it was explained to me by an insurance broker about a year ago was that we just got lucky that we had this spell without hurricanes. And so insurance came back so far that even as much as maybe just a year ago, we were kind of back to where insurance used to be in about 04, 05. And I don't know if that's exactly the case, but that now we've surpassed that, but it's all cyclical. And so much of it has to do with, there's a lot of drivers of that. Derrick identified the drivers, much of it being weather. And it's not just weather in Florida, it's weather around the world, because the floods in Libya can affect us. The fires in Hawaii can affect us. It's because the reinsurance world, there's only so much capacity for reinsurance. So they're selling to the insurance carriers, the reinsurance guys, and they're covering the world. So what happens in Florida can affect the rest of the world, just like what happened in Libya affects the world. So that's kind of the way the insurance markets work, based on my understanding. So Laura, let me ask you, based on all this stuff that's going on, you're an association attorney, you're dealing with clients every day. They're looking at their budgets. They're looking at you saying, all right, you're the attorney, so you must be able to affect what happens in the state legislature. So tell me, what are the clients asking you about? What is top of mind for them?
So a lot of the clients, like you said, I think the first words out of your mouth were like probably the biggest line item in everybody's budget, right? Is the insurance premium. And so what I've heard from, almost everybody, all my clients that are talking about insurance, they are talking about the price of insurance, and they are trying to figure out how to cut some of those costs. And, the questions that, I've been presented with are, what does it mean, to have adequate property insurance coverage? What does it mean? Do we have to have, what does it mean to have replacement cost insurance? Are we able to, how do we self-insure? Can we self-insure? None of us have mortgages on our units. Can we self-insure? And, they're all trying to get very creative out of the box, thinking on what do we do about these insurance rates? And, and how can we, pay less, right, than full replacement cost or replacement cost. And so those are a lot of the questions that I'm seeing these days. I've also seen a lot of associations tell me that their insurance has threatened not to renew them if they have not replaced the roof, or they do not replace the roof on the condominium building. So a lot of clients are being forced into the position of having to, maintain or go ahead and do replacements where they just maybe been kind of limping along for a lot of years. They're being forced to actually, make those, do those roof replacements in order to even be able to stay insured. So that's, a lot of what I've been seeing. So we've been answering a lot of questions. We've been referring a lot to, Derrick's office, saying, you want to talk about, being able to self-insure. Let's, it's a complicated process. It's not what you think it is. Just because nobody has mortgages on their property doesn't mean that that doesn't mean you're self-insured, So, those are a lot of the questions that we're seeing.
Derrick, let's talk about self-insurance for a minute. What does it actually mean to be self-insured as a condominium? And what do you have to do to really do that? How many dollars do you have to have in the bank for replacement value if you were to truly self-insure. Just to get that out of the way, and I think we can
Yeah.
probably dispel pretty quickly, it's not a real option.
Right. Yeah, exactly. Thanks, Tim. And thank you, Laura, for that. As far as self-insuring goes, I think that term is used very loosely, and people just have a common misconception of what it truly means. And in order to self-insure a full either high-rise building or garden style community or what have you of any kind in excess of 30, 40, 50, or $100 million, you would need to have that amount or adequate amount of reserves set aside in a bank fund in order to meet the statute 718 requirements and put that money aside so that in the event of a loss, you would be able to recover with that line of whether credit, money, or what have you. That would be the self-insuring concept. Now, the closest thing to that these days, or the first steps toward that, would be increasing risk tolerance, right? Like increasing deductibles for windstorm from whether it's 3 to 5%, 5 to 10%, or talking about alternative solutions such as the loss limiting things I was alluding to before, those types of solutions as well. Those would be building up a plan, reducing costs on your overall insurance, but planning out that with whatever amount of savings that you may be having in premium wise, setting that aside and having the right risk retention in force and in place with everyone having the same understanding.
So Derrick, what are you saying? Because what I used to see, let's say 5 years ago, there were a lot of properties that still had 2 and 3% deductibles. What are you seeing today as far as what decisions on deductibles to try to help manage that annual premium cost?
That's right. In most cases, what we're seeing are carriers, despite the increase, we're not seeing a significant savings on making any change on those wind deductibles. What we are seeing though is carriers forcing communities to go from what we used to have as 1 or even 2% deductibles now being forced or keeping a 3 or pushing them to a 5, and at sometimes maybe a 7.5 or even the 10%. Which leads to maybe another conversation segueing into just lending issues, et cetera, et cetera. So, but in most cases, it's an average of 5% of which they're being forced to, and we're seeing some cases at 7.5 and 10% on those deductibles. And that's not to say and mention about the all other perils. So many people are focused on windstorm, but forget some of the other perils that are of a significant exposure to the association, such as water damage. And what we've seen on a lot of carriers taking a little bit of a step backward on are water damage deductibles, being that has been such a large expense to the insurer. Is what they're doing now is increasing those water deductibles to, in lieu of your standard $5,000 or $10,000 or even $2,500, to upwards of $25,000, $50,000, and even $100,000 deductibles specifically for water claims. And that also, depending on your program, can make a significant savings by making those adjustments as well.
So this past session, the state legislature passed the glitch bill, which is Senate Bill 154. So can you talk a little bit about how the changes of that bill are affecting people's approach to insurance right now?
Mostly that bill was specific to the milestone inspections. As Laura had mentioned earlier, and everyone hastening their way to Citizens. Citizens is a big topic of conversation here, as so many of them, from 400,000 to 1.8 million policies just this last year alone. We've seen so many associations kind of running their way to Citizens, as Citizens has significantly undercut the market. With regards to the glitch bill, though, and having these inspections and who can conduct these inspections, because so many associations were now having to meet the requirement that they didn't have just enough manpower to simply conduct the inspections. So they've broadened that on who can do that for them. Ultimately, in performing these inspections, I can't emphasize enough how important it is for our associations to do these inspections, as it's become more of a barrier to entry, meaning with the limited amount of capacity that is available, whether in the private market or even simply just getting an approval from Citizens, right, alone, because even Citizens is scrutinizing so much and limiting their acceptance or availability with condominiums and associations, like Laura mentioned, getting those roof replacements. I mean, those are critical into your renewal process. And if you don't have those, or you're not performing those or up to par with what is needed, that is going to further limit you or even worsen the condition of your renewal, and meaning which consequently means a higher premium in turn.
So I got a question here from George, and he's asking about in the case where there's great damage to not only the condo building itself, but also to individual units. Is there a way to force a condo owner to fix up their individual unit? Say they don't have adequate insurance, no mortgage, they just want to walk away. Is there a way to force them to do the right thing? Laura, do you ever deal with that? Do people come to you and ask you about that? Because let's just say it's a neighbor that's not being a good neighbor.
I mean, generally, yes, I deal with that all the time, right? That we get unit owners who just don't do the right thing. Because we're such a litigious state, I mean, sometimes the only thing that you can do is sue that owner, right, to force them to do the right thing. I mean, if we're talking about, if there's, I guess it depends on what we're talking about, right?
Let's say it's water intrusion, there's
right.
mold, and that mold is now spread into my unit because mold doesn't understand ownership and barriers, so it just keeps moving.
Easy, a perfect example. I deal with that on a regular basis, and in those situations, what I tell the client always is, look, water is awful, right? Water is the thing that causes the most damage. And when it's not taken care of, it does turn into mold. And, when water travels and traverses, it's definitely, hitting the common elements. And we have an obligation as an association to make sure that the common elements aren't damaged and that other units aren't damaged, and, water spreads and mold spreads. So if we can't get the unit owner to, make the repairs, the association at that point has an obligation to maintain, repair, and replace, right, the common elements. And if that means taking care of that water damage and then having to, for lack of or let's use the insurance term, we'll subrogate, right, against the unit owner. If we have to sue the unit owner for those damages, we have that option. And, right in the Condominium Act, under the insurance provision that we're talking about, unit owners are responsible for damages that they cause, that their negligence, intentional acts, cause to the common areas and to other units. And, so if the association is forced to rehabilitate or repair for those issues, then the association can turn around and make a claim against the unit owner for those damages. But making sure associations can't just sit around and let the unit rot or let the damages spread, because, we, especially in terms of a water claim, mold spreads and wreaks all other kinds of havoc. And a lot of times we have associations with insurance policies where there's mold exclusions. So not even something that insurance will cover, at the end of the day. So
talking about claims, Mike, I'll ask you this question. One of the things that the state legislature eliminated or addressed in the most recent legislation was one-way attorney's fees. So can you talk about what that really means when it comes to filing a claim, and how has that had an impact on lawsuits that might happen inside condominiums?
Sure. So you go back after Irma, right? Before Irma, there was prevailing party attorney's fees one way in Florida. It meant that if you had to file a lawsuit against an insurance company, you recovered a dollar more than what they had previously been willing to pay you, you were entitled to your prevailing party attorney's fees. So if I made a claim for, the moon, and they didn't agree to pay me the moon or anything else, and I sued and I got a dollar, then not only would they have to pay me that dollar, they would have to pay me all of the fees that I had agreed to pay my attorney. After Irma, there was some legislation that went into place, and it really tried to strike a balance, because what was happening is you were getting claims that were just really, really high. And so there was an attempt to strike a balance by which a policyholder would need to make a claim and submit something to its carrier, and then the ability to recover attorney's fees against the carrier would be measured and would result by how close you were. So if I asked for $1,000 and I ended up getting, and the insurer refused to pay it, and I ended up getting $1,000, I'm gonna get paid my attorney's fees because they're paying me what I was supposed to get and what I told them I should get. And frankly, at first I was a little skeptical, but I thought that was going to be a good step. What they did though, after Ian in 2A, was they just eliminated it altogether. So now I do not get prevailing party attorney's fees if there is a claim made, and if I have to sue and I recover, I'm not entitled to it. Now there's some other ways under Florida law that you can still set up a claim for attorney's fees, but it is put the insurance company in a much stronger position, because that used to be the great equalizer, right? Because if the insurance company was going to be heavy-handed, I knew that, and frankly, it created a plaintiff's bar, sometimes for good, sometimes for ill. It created a bar of attorneys that were willing to take all of these cases because they knew that if the insurance company wrongfully denied a claim, they could take a case, they could get paid on it. I think that population is going to shrink, and I think there are going to be fewer lawsuits. Not all of the lawsuits were appropriate. Some of the lawsuits might have been considered frivolous, just like some of the denials of the claims or the payment of the claims might have been considered inappropriately low. You kind of had to use one both ways.
Why is Florida such a litigious state?
Pardon me?
Why is Florida such a litigious state?
That's one of the reasons.
Yeah.
One of the reasons is, look, I'll look at it from a number of ways. I don't know what the numbers are in Louisiana. I'd be interested to see that, because Louisiana suffers lots and lots of hurricanes, probably second only to Florida. And what I would suggest is that Florida's got a whole lot more money sitting on the coast waiting to get washed away. So there are claims. There's a great number. I think it was 8% of the premiums and 80% of the claims. I'd wonder, Derrick, and maybe Derrick knows, maybe you know, Tim, what the percentage of the losses are. But you know, I think there's been an adversarial attitude, and I think there's been an adversarial attitude for a long, long time. Whereas in a lot of places you go, the insurance, it's there, you know, it's like the commercials you see when you're watching football on Sunday, you know, it's the farmer's policy perk or whoever, they're here to take care of you. And in Florida, it became this whole notion that they're here to underpay you. And people were getting underpaid and people were suffering. And when you lose your roof due to a hurricane and you don't understand or can't readily identify all of the damage that flowed from that. I have a colleague right now that's suffering from the last hurricane, and every day she's texting me, it seems like, and saying, well, now we figured this out, and now we figured that out, and now we figured this out. And the insurers are spread so thin because this loss has just crushed so many people that she's not getting taken care of as she otherwise should. Why is it such a litigious state? I don't know. I have seen a lot of, I don't want to call it predatory, but I've seen a lot of very, very aggressive behavior going both ways. One of my earliest memories was not earliest memories. One of my earliest memories of practice law was after one of those storms in 2004, and I was looking at a loss, and this woman deserved a new roof. It wasn't a big house. She deserved a new roof. She had a blue tarp sitting on her house. She deserved a new roof. I'm representing the insurance company. I examined her under oath. I come back to the office. I called up the insurance company and I said, I think she should get a new roof. And they said, yeah, she should. We just don't want to pay right now. And I was just, you know, I've seen it go both ways, that there's just bad behavior, which I think has resulted in a lot of litigation.
Yeah. So, Derrick, I want to come back to you on a couple of things. So just in the process, we had a lot of questions prior to the session starting today. People wanting to know a little bit about how the process works. There are 3 questions actually that came from Daytona. I don't know if 3 different people. I don't think they're all at the same properties either, but Kurt in Daytona wanted to know what's the agent of record letter? Explain what that is, because there's some confusion about that. And if you wanted to get an agent competing against your current agent, because maybe you're not happy with your current agent, how do you do that? So talk about that agent of record letter, because that's important.
Sure, Tim. I actually wanted to make a point, and piggybacking off of Michael, about the casualty and liability also. I think that's important for people to know, but I'll answer your question real quickly. An agent of record letter is an authorization of record letter that is signed by a member of the board that authorizes or allows another agent from another brokerage or agency to represent the insurance or condominium in the insurance marketplace and negotiate on their behalf. That's simply put, that's what it does. It simply lets go or fires the incumbent broker or that person, and then allows the new broker to come in and negotiate. It is very different in our world in the sense where with personal lines or home and car insurance, you can go from one State Farm office to another and you get either simultaneous quotes or Allstate or what have you. In our world, only one broker in essence is allowed to go out to market at any particular time. And because of the limitation within capacity we're all fishing within the same pool, so to speak. And what I always say to a lot of my clients is you're limited to the creativity of one broker on how those programs are developed. Tim, your ending part of that question was what? So if we wanted to get competitive bids, was that it? I'm sorry.
Yes, is that
Okay.
because you said to issue an agent of record to another agent, you're firing your first agent.
That's
but
right.
You could still come back because there's only so many markets to go to. So let's say your original agent works out of a specific market and the second agent maybe goes to 2 or 3 other markets.
Sure.
You can get competing quotes that way, and you can still
That's-
go back to your first agent. You don't have to take the quote from the second agent, correct?
So yeah, that's exactly right. So there's a few options to choose from. This is not back in the days, as you talked about, in a soft market where there was so much capacity, so many things, so many options that you could split markets and say, hey, broker, take these 5 or 6 markets. Broker B, you take these 5 or 6, and you both bring in competitive bids and let the best man win. Nowadays, since we're only dealing with just a handful, what I advise and recommend is, in most cases, this is one approach now, that there's several others. If you're simply just dissatisfied or you're getting last minute quotes or you're not getting the proper information communicated to you, then it's at the board's discretion if they want to choose to agent of record letter or hire a new broker for their added services or whatever it is that they presented as future value. But if you're truly looking for competitive bids, one alternative method would be simply that, since we're dealing with a handful of carriers, to allow the incumbent broker his best foot forward. And in somewhere within 30 to 45 days, he should have some type of indication, whether it's a deviation of about 5 to 10%, for him to deliver his proposal or renewal proposal, or somewhere around about of where he should actually be with regards to property insurance, being that that's the biggest ticket item. And then in turn, allow a competing broker or whomever to go ahead and look into opening up the market with the same handful of carriers besides Citizens, because again, Citizens is a big topic here as they're substantially undercutting the market. But maybe perhaps the second broker could use that same handful of carriers and demonstrate something more competitive by structure layering or something to that effect that would allow perhaps a premium savings in the end. That's just one alternative method. Does that make sense?
Yes, it does. So Laura, you probably deal with this a lot. You probably have clients oftentimes ask you about changing insurance carriers, and or the broker. What's the best advice you could give people when they don't feel like they're getting what they need from the current broker?
I mean, if they're not getting what they need from the current broker, then they should, they are vendors, and they should go talk to somebody who talk to other vendors to see if, listen, these are relationships, right? And so if they don't feel like they're getting the service that they need, then they need to go talk to Derrick at Brown & Brown.
Yeah.
Tim, I have one point on that I think is critical and understanding for a lot of board members that have not been informed, and hear me out on this. Because of the ever-changing industry and the hardening market and what we've seen up until really the last 24 months, most people could sign an agent or record letter away until the day of renewal. So on the last day, if they decided to make that last minute change, everything was all good and it was accepted, insurers would receive that, and then that new broker would be awarded the business. Since over the last 12 months, a lot of that has changed, and a lot of people don't understand this. But what a lot of carriers now, and select ones, let's call it 10 in the marketplace available, maybe 6 or even 5 of them are applying the method this way, but they're calling it broker protection rules. So what that means is, in most cases, you have to be cognizant of this. If you want any type of competing bid, what they're saying and doing is that 20 days out from your effective date, we are no longer accepting agent of record letters, which at some point, okay, some brokers may strategically, right? And I'm not, pointing any fingers, but some brokers will sit there and tell you that they can't get their quotes on time and then lead you into the 25-day, 30-day, 20-day window, and then put you into a position where the board's backs up against the wall and essentially holding you in a hostage situation where even if you were to try or make an attempt to award a business to another broker or give that person an opportunity, you would be at the discretion of that incumbent broker to allow that process to happen. And therefore, now an agent of record letter is no longer in the hands of the board members. Does that make sense?
I have a question. Can I ask a question, Tim?
Please, please.
Is it? Yeah.
So in that situation, I know that I have clients that, as I'm listening to you, I would want to tell them, well, maybe it would be in your best interest to start shopping for insurance, several months ahead of time.
Absolutely.
And demand, a response from your broker by a certain date. On the other hand, I get a lot of comments, really, because I leave that issue to your wheelhouse, right? But I get a lot of comments from boards and they tell me, well, we don't actually get those quotes in until the very last second, which I guess is what you're telling me, right? And so they're like, the broker went out to like 5 different, carriers, and this is what they brought back 2 days before, expiration, and they had to sign. So I guess listening to what you're saying, maybe the best practice for the client is, start shopping for insurance a couple of, I don't know how many months, but months before it's set to expire, instead of leaving it to the end. Put that deadline date on your calendar as, bump it up a few months so that you don't run into that situation. I mean, is that practical? Is it possible?
So as a management company, Laura, we tell our clients, like, you need to start at least 90 days in advance.
Yeah, the formal process for us is 120 days, is as soon as underwriters can start receiving submissions. But granted, those actual quotes may not come until that 45th or 30-day mark. Now, a lot of these smaller policies, liability and D&O, don't be fooled. That stuff can come out 45 or even 60 days out. Those are not the bigger issues. The bigger issue is a lot in the property. And so what I've done as a higher level of service in my office is we call them progressional updates, right? And what I like to do for all my clients is still meet with them, have a pre-renewal meeting, a budget meeting, but in addition to that, have a 90-day meeting. Let's have a 60-day meeting. Let's have a 45-day meeting. Then let's have a 30-day meeting. And once again, at least be able to demonstrate more or less where we're going to be. And so long as the board is informed, I think that they're okay with the message. That way it doesn't come to a surprise as some type of sticker shock that something happened, but at least keeping them informed along the way. That's important.
Derrick, how early will a carrier provide a quote before the policy renews? Will they do it 90 days in advance, 60 days in advance, or do they wait till 45 to 30 days? How early can you get a quote?
Yeah, Tim, a lot of that depends on also the time of the year. The largest condo season for renewal period is 5/31, right before the hurricane season. As you can imagine, and what we experienced in this last 12 months with Citizens, as people were trying to hasten their way there, they were significantly understaffed and overly inundated with submissions. And this is a very true story. I could not make this up, but in many of those cases, people were kind of rolling the dice on even going past their effective date to procure wind coverage through Citizens, as it was substantially less than what was available in the private market. And so that was a big thing as well. But to answer your question, on average, I mean, most of those D&O liability quotes, as I said, 45, 60 days out. But from a property standpoint, depending on, and it's really on a case by case, are we talking layers here? Because layers could consist of more than one quote at a time. If it's a ground up program, 0 to 100 million, Not that that's very common these days, but perhaps once again, we're looking at that 30 to 40-day mark, give or take. And in some cases, if there's changes or updates, or if we're waiting on an appraisal to be received that hasn't been yet conducted, or a 40-year that is lingering that's supposed to be completed, or updates or improvements or recommendations that are outstanding from last year, all those things could play a factor as well.
I have another question. Sorry.
That's all right.
No, so my understanding of Citizens is that they are the carrier of last resort. That was always how we sort of referred to them. So
right.
are you saying that our clients, let's just condominium associations, not just individual homeowners, like, is Citizens an option, or is it there are no other options? We go to Citizens. I'm a little can you clarify, like, is it Lloyd's of London or Citizens? Let's go with Citizens, they're cheaper. Or is it, oh no, there are no others who are going to cover your building, you're going to be stuck with Citizens?
In the past, yeah, no, absolutely. Great question. Fair question, Laura. Citizens is still known to be and intended to be the carrier of last resort. What we found now, though, more so in these last 12 months, is what we found is Citizens has become the first resort from a financial perspective. And that has been the first consideration, as in the private market, if you're looking for the same type of wind coverage, could be almost double or even triple the cost. Citizens, in my opinion, still has a tremendous downside. Among some of them is something that they're able to do is they're able to surcharge up to 45% of the policyholders, and they have 3 different tiers that they can do that, considering the catastrophic loss that may impact the state of Florida. And that leads all the way to us taxpayers ultimately paying the brunt of some of that stuff.
Derrick, explain what you mean by surcharge up to 45% of the policyholders, please. Sorry to interrupt you.
That's okay. No, great.
I understand a lot of this. I'm not sure everybody does.
For sure. So what happens is whatever premium that you're estimated on, whether that's on a wind only or a full peril basis, however your condominium is being insured through Citizens, they have the ability at any given point, and you agree to this, you sign off on this, that at any given point in that 12-month period, if there's a catastrophic loss that affects Florida to a considerable amount, no one knows what that amount is, but if they deem it necessary, they can charge you as a policyholder on an individual basis up to 45%. Now the tiers go on. I believe that's tier 1, but then there's 2 and 3 where it leads to, I believe, all property policyholders all throughout the state of Florida, and then as much as all policyholders, period, meaning if you have a life insurance policy, an auto policy, that they could also charge a percentage of those policies as well.
So essentially, they're assessing you.
That's exactly
as
what
they're insured for somebody in order to pay somebody else's claim, correct?
That's right. So if the state of Florida was hit in the panhandle and it was catastrophic enough, even us here in South Florida could feel the impact of that if indeed Citizens decided to surcharge.
Right.
Absolutely. So in addition to the surcharge and assessment, thank you, Michael, to Laura's point, we've got the wind application, right? So a lot of the wind application or wind hail deductibles for Citizens is far inferior of that of the private market or any one admitted option as well. There's also the forfeit of ordinance or law coverage, which is tremendous. One thing I recently just went through was sinkhole coverage on a multi-peril Citizens policy where they're only able to offer 10% on deductibles for sinkhole. Well, Fannie Mae is not accepting those terms. So the only way for us to maneuver around that is by removing the sinkhole coverage so long as they want us to stick with Citizens. And again, that becomes a cost factor decision for a lot of people. So Citizens is indeed still the carrier of last resort, but most people are resulting to that just simply because of their financial obligation or what they feel is affordable to the association and still having to meet those Statute 718 requirements. There was another.
I guess one of my questions, and it's for Derrick and Laura. Sorry, Tim, I'm following up here.
This is exactly how it's supposed to work. Please keep going.
Insurance is a lot like anything else I've found. I do a lot of insurance in my construction practice. I do a lot of insurance and property insurance, and you get what you pay for a lot of times. So, all of the insurances aren't exactly the same. And Citizens is an excellent example because while the premium is smaller, the coverages or the benefits could be less, your ability to recover could be less, et cetera, et cetera, et cetera.
Exactly.
And I guess my question is, Laura or Derek, from an association standpoint, at what point in time are you doing just enough to pass the legal threshold, but it's still not to the best benefit of your association, and consequently, I mean, you're not doing anybody any favors. What do you guys see where people are trying to save money, but ultimately they're being penny wise and pound foolish?
Michael, I also want to make one point. Laura may answer this question, but I also want to note that being that Citizens is the last resort, there are some still requirements, such as if there is an available market that is under 20% in cost, you're not eligible for Citizens, period. And whether that being an admitted market or something in the private market available, but to no avail, most associations can't find that alternative. So it's still, again, it's intended to be the last resort, but being the way that the market has been and trending, Citizens has been a first result.
What does that mean, under 20%? 20% less than, what does that mean?
Correct. Yeah, there's a 20% rule. So if it's under 20%, so if Citizens' pricing is within 20% of your renewal offer, let's just say outside of Citizens, you're not eligible for Citizens, period. So there needs to be that 20% requirement. So then again, it leads to it simply being a last resort. But in this market, 20% is very easy to accomplish. You can get one for 40, 60 or greater.
So one of the questions that I've had a lot lately, and I know some of my partners have had also, and we were hoping that Derrick, you could answer it, is, remember when I started out, I said, I'm getting a lot of questions from a lot of people trying to think outside the box, right?
Sure. Yeah.
And so, one of the questions that we're getting is, is hazard insurance when, the statute doesn't say that hazard or wind is required anymore. It used to. Remember, it used to say, every hazard insurance policy issued in the state for condominiums has to include this, this, and this. Now
Right.
It says, insurance, adequate insurance has to include this, this, and this. And so they're trying to get out of having to carry the wind or the hazard portion of the policy. And I'm like, because they say it's just not in the statute anymore, right? It's not written in 718-111 anymore. So how do we, how do you respond to that? I mean, hazard is part of the adequate property insurance. I mean, you need hazard in order to get the replacement. I mean,
Well, every 30, and I see Michael laughing in the background, so he must have an opinion on this. But as an insurance consultant, we have an obligation to get a replacement cost value once every 36 months, of which that is intended to be what is quote unquote the full or adequate replacement cost of an entire building. What we've been doing and outside the box thinking, and I always provide it as an option. My first recommendation, full disclaimer is that I always get full replacement costs on the association. Of course, I highly recommend it, even if that means, let's lean on Citizens to do so. But some of that outside the box thinking entails reducing the cost for wind coverage. Hear me, windstorm accounts for about 80% of your premium here in South Florida region. Because we are such a high cat state with regards to hurricanes, the hazard portion, that fire, that water, that lightning strike, is less costly than that of the damages caused by a hurricane. So therefore, anytime, wind season from June 1st to November 31st, that's the bulk of your premium. So by sublimiting this windstorm coverage, you could reduce, let's call it $100 million building, reduce it down to $50 million, but move the pendulum substantially in costs in excess of $300,000 or $400,000 potentially, right? It's really on a case by case. But to do that, right, to further make the most informed decision, one thing I always advise, and I do for all of my clients, is something called a windstorm analysis, or a probable maximum loss analysis, which is a professional and actuarial data or a piece of information. This is essentially how in the background, how actuaries determine the pricing for insurance. But what it does is it gives associations a probability of over a period of 12 months that what the likeliness that a building of such statute, right, and geographical location will sustain X amount of damages over a period of time. And then it goes on further to talk about return period, which means the likeliness of occurring over a 100-year return or 200-year period return. And with that data, that information, what it allows us as board members to do is to make the most informed decision if deciding to go down that route, as opposed to purchasing that of Citizens, which again could result in a 40% difference. But when you're saying 40% on $2 million, that's a considerable amount of money. And so those are the alternatives in which we're proposing today. Now, and I'm going to segue this to Mike, because is that legal? Is that allowed? Is that right? What is the DPPR saying about that? What changes might they make in order for us to do more of these things?
Yeah.
Again, always full coverage, right? Full disclaimer.
Yeah, and that was exactly where I was going, right? I mean, so at what point in time, as a board member, you have a fiduciary obligation to the membership, right? So at what point in time, and doing these studies, doing these risk analyses is probably the way that you can satisfy that obligation, by doing that diligence. But I sat on the board of a 35-story tower 4 blocks off the water in South Beach years ago. And I'm not going to want to be the one making the decision to sublimit wind. That would just make me really, really nervous. So I guess that was really what I was asking, is what are you guys seeing with people trying to, some, if catastrophe strikes, you're going to see it as you cut these corners to save a few bucks, and now we're all paying for it. So, that was just a great example of what I was looking for. Derrick, now, or Laura, when people are electing to do that, is there any, absent a catastrophe, or does it cause any other problems? Does it cause any other problems with lenders, for instance? When a lender is trying to underwrite a mortgage for a penthouse, do they look at it and say, well, the building's only, the building's wind is sublimited, and therefore, have you seen that happen at all, or other unintended or unexpected consequences?
I have not seen that happen with regard to the insurance, and the limits that the associations are carrying. The issues that I'm seeing right now with, bank underwriting has to do with any other work that's going on at the condominium. If there are pending construction projects, some of them are just, I've literally just had this week, a bank tell a buyer, right, we're not going to lend on this building that you want to buy at, because they're still doing remediation work on the PT cables, and they're not completed, right? And the contract that is currently pending was only for a portion. And I guess because of the, according to them, because of the type of loan that this person was trying to procure, the bank would not lend, to a building that had a pending project ongoing to repair the PT cables. They wanted it to be completed. So I haven't, to your question, I haven't seen, underwriting deny based on insurance policy limits.
I've seen a
If I could, we only have about 5 minutes left, believe it or not. We're shooting up 11 hours. So I want to cover just a couple of things, because we had a lot of questions from the listeners today that we haven't quite yet gotten to.
No
but
problem.
One of them I want to ask, Josh and Boca was asking, how much does your, Josh was asking, what does it mean to insure the condo common element at full replacement value? And does the board have any options?
I believe that's a Michael question, right? Or should
Well,
I
Or
answer?
question.
Well, the replacement cost, just quoting directly from the statute, the replacement cost is determined by a property appraiser, and it must be done once every 36 months. So, an independent insurance appraiser has to come out to determine what it will cost if your condominium is destroyed, what it will cost to rebuild it. I even had a question a couple months ago. I had a client who said, even if we take a direct hit, I think I was talking to Michael about this the other day. He said, even if we take a direct hit in a Cat 5 storm, our building is so well built, we won't have total destruction. So can we get, can we get less than full replacement cost? I said, that's a question for your insurance agent. I don't know that you wouldn't have, less than less than full destruction or whatever. But yeah, I mean,
I do want to follow up on one thing that you just said about, you mentioned appraisals every 36 months are required. That was a question John asked. So John, the answer is get them done every 36 months.
Right.
But that's been another big factor in why insurance has gone up so much, because property values have escalated dramatically since many people got their last appraisals. And so that's another element, in addition to the weather and the risk and the Surfside and carriers dropping out of the Florida market. The fact that your property value is going up is a good thing, but it costs more too.
Right. I mean, the
On
cost of supply-
20 to 40% is what we've seen on those replacements. A lot of it due to, since COVID, cost of labor, materials, and everything going up. That's exactly right, Tim.
So Derrick, to that point, I've probably got 10 different questions coming into today about what kind of guidance are you giving your customers with the average increase? Because there are a lot of people said I had 100% increase. The guidance that we're giving our clients as we build budgets for condos moving into next year is to expect about a 40% increase.
Yep. The guidance I've been having and some of the conversations from the higher ups have actually been more in the realm of about 25 to 30%. There was a bulletin on Citizens alone where they're estimating on associations approximately 28.5% increases, but that's not to take into account their inflation guards. So if you're already with Citizens, note to self, and here's just a small M&M, be expecting that 28% increase, but also take into account the inflation guard of about approximately another 10% in valuation that they're going to place on your policy that may lead the increase in excess of over 30%. And that's something else. In the private market,
a question from Lise. She was asking what was the background for the 28.8% Citizens increase. So you've just addressed that.
Yeah, that's perfect. So then, and in the private market, I think unintentionally what we saw that since Citizens undercut the market so much that these reinsurers, we talk so much about capacity, but what we're seeing in the latter part of this year is unintentionally, we had so much leftover capacity because Citizens ate up all the business. So I think reinsurers will take into account effective 1/1 to reassess how much money that they're going to allocate for the period over the following 12 months to determine, all right, what do we got to do to get some of that business back? And at what price is it adequate for us to make financial sense for our business? I'm sure all those things will be considered, but rumor has it, like I said, 20 to 30% on average. And then, of course, no one has a crystal ball, but if the windstorm comes along or a major storm blows our way between now and November, then who knows from there?
Laura, it sounded like you look like you were ready to jump in on that.
Yeah, sorry.
No, I mean, no, just thinking, ahead. And I think, certainly and we were talking right before, I think we can anticipate, that there's going to be a lot of legislation, in the session next year at the beginning of 2024, no telling which way it's going to go or if any of it's going to get, passed. But I think that we can anticipate that we'll see, a lot of potential legislation, on the insurance issue. So
Just the same way you get sick, it takes the same amount of time to get better. And I think with a lot of the laws passed, it's not an overnight fix, right? I think with all these things taking its due process and over a period of time, we'll see the positive outcome or that light at the end of the tunnel once things start really having time to fix itself.
Okay,
I mean,
final question for each of you, because we're at the top of the hour. So I have a final question. Laura, I'm going to start with you. So talk about the importance of preventative maintenance in a building and how that can also impact insurance.
I mean, preventative maintenance is key, right? I mean, not only, staying on top of that. I mean, failing to maintain the building creates all kinds of liability issues, right? And because when we're damaged, I mean, it just trickles down. So preventative maintenance, making sure that the roof is maintained, making sure that the building is properly waterproof, making sure that you've got your inspection reports done. All of this, I think Derrick mentioned at the beginning, goes into, insurance, how much your insurance policy is going to cost you, how much your premium is going to cost you, because insurance carriers are looking at these items. And if you are maintained, if you've got a good roof on your building, because it definitely brings the risk down for them. So, I think maintenance is key. Don't skimp on it. Make sure it gets done.
And then Michael, your last question, what do you think the expectation should be from owners in Florida relative to what's the legislature going to be dealing with in law this next year? And do you see there going to be changes? Is there going to be relief, or do you think they're going to hold pretty fast to what we've got today?
Well, it's a many faceted question that's I'm not going to close down with. I completely agree with what Derrick had said just before. The laws get made, and the results of the laws isn't instantaneous. It's not the way it works. So, frankly, as I alluded to earlier, I thought that the measures they put in place after Irma didn't even have a chance to take hold before they put more drastic measures into place after Ian that I frankly wasn't necessarily expecting. I've got really, really very little idea as to what you're going to see. I think that as costs go up, there's going to be an outcry, and there might be some further immediate legislation. I just, frankly, I don't have my finger close enough to the heartbeat to take that pulse. I just don't know.
But to that point, Derrick, I'll ask you this final question. Cost is the big thing. Probably the single biggest question that I got coming into today was, what can we do to control costs? Like, we know that somewhere between 25 to 40%, we can expect that increase. A lot of people experience the same increase, even more last year. So costs continue to go up. They haven't been capped yet. So what can owners do or board members do to control costs inside their properties?
Just as you had asked Laura, upkeep of the building is important for you on two components, right? One is not only for your property and the structural integrity of that, and as well as a barrier or entry for those markets from a property standpoint and helping alleviate that. Or if your effort is to get into citizens, it's upon a requirement. But also on the liability perspective, right? Casualty brokers or liability insurers don't want to see, they want to see pride of ownership, right? They don't want to see any neglect or lack of maintenance on any one particular building, especially if they're going to take a chance or insure any one particular risk. So they want to see, and this is something that they've been asking of us, 12-month board minute meetings, discussing some of those maintenance requirements and things that have to be done, and ensuring that those people are not neglecting those. So it helps in many different avenues. And one way to do that is keeping up with the roof, right? If you're getting a roof condition report as per the requirement of citizens, perhaps we need to consider, quote, manicure that roof up. Let's pressure wash it up a bit in some of those photos and make it look presentable, so that you're opening and allowing yourselves and your association the best opportunity to get the most competitive price.
I think also, are they looking at reserves, Derrick? And what about having a healthy reserve? Are insurance carriers looking at reserves?
As a part of this Florida State Statute 718, it's always been routine for us to request the budgets or the current financial standing of any one association. So that's being looked at it as far as one component, unless otherwise, or one particular association, because it's a small world in our business. But if a carrier sees one rotation of an association that has a poor financial state, then likely they will ask for that, and ensuring that they're able to upkeep the building if it's not already up to date, if it doesn't have the impact windows, or we're seeing the roof's coming up on its 20-year of age. What is the budget? What is the likeliness that they'll be able to afford those types of improvements upon requirement, or if we're just going to gamble it on it for just another year or so? They really look at things from that perspective.
And then I'll say my 2 cents on maintenance from a claims perspective. Your maintenance of the building and the record that you keep of your maintenance of the building is going to go a long way if you suffer a loss, because then you can show that it was the peril that caused the damage, not neglect.
Right.
And I'll leave it there.
Right.
And thank you for that. That leads into, I think a strength of what we do from KW's standpoint. We have a very detailed preventive maintenance plan. We have a work order system. From the time we start managing a building, we build a history on every piece of equipment. So we know when it's been serviced, when it's been touched. And that's important because it's important from a warranty standpoint, just on the piece of equipment, but can also be a big influencer when you have to bring something to court relative to an insurance claim. So knowing that it's been properly maintained helps you as an owner, as a board member, demonstrate that your equipment was indeed maintained properly, because we walk into a lot of properties that it's not been maintained, and it'd be hard to say that it was in good condition before the storm came through. So that's a really critical point. Well, we are out of time, but this was fun. I think this is very engaging. Thank you all for your involvement. I think the discussion today was fantastic. Hopefully our panelists got value from it today. Special thanks to our panelists, our attorneys from Siegfried Rivera, Laura Manning and Michael Clark. Thank you both very much. You guys were fantastic. And Derrick Karadi, Senior Vice President with Brown & Brown. Derrick, you're a rock star today. Plenty of knowledge. We certainly appreciate it.
Thank you so much.
From all of us at KW, we thank you for participating today. As we say every month, be respectful to your neighbors, stay healthy, have a great month. Thank you all so much.